All right. Good morning, good afternoon, wherever you're dialing in from. It's great to have you here with us. Today, we're going to be doing a live stream to announce the RWA launch on Monday Trade. And we're very lucky to have a few of the ecosystem participants, Monad and Townsquare, with us that have been integral to helping us launch this. So very excited to have you both with us. What we're going to do today is we're going to cover a little bit on where RWAs are at generally in the space. I would love to get some of your thoughts on that as well. But first up, let's get some intros going. So over to you, Townsquare. Please feel free.
Yeah, absolutely. Yeah, thanks, Tony, for making this happen. I'm very excited about what you guys are up to. I'm very glad to hear about the launch. This is JC, the co-founder and CEO of Townsquare. We are a Monad native cross-chain lending protocol that's been live on Monad mainnet since day one, and also was live on Monad testnet way back. So been here with Monad for quite a while now, through the ups and downs. So Townsquare, in short, is we primarily facilitate the cross-chain lending side within the Monad ecosystem. Currently, we have been building up a lot of the liquidity on Monad layer one. We recently crossed the 205 million total deposit blocked a milestone. So very excited about also what's to come next. I think we've in terms of the ecosystem integrations, from LSTs to a lot of the native assets and also the bridged assets, and also supporting new assets such as many of the wrapped BTC assets that are about to be onboarded to the Monad ecosystem. We are very active with these new primitives, and definitely on the RWA side, we're very excited about what anchored Monday.trade you guys are up to in terms of just getting RWAs equity token traded on Monad mainnet, utilizing Monad's speed and efficiency. So yeah, very excited about this space.
Yeah, awesome, and we'll definitely get into that in the shortcoming. And yeah, over to you, CJ. We got JC and CJ. A good little combo here.
Yeah. Thanks so much for having me on, guys. I'm CJ from the Monad DeFi team, and I am taking care of a lot of DeFi related activities, including and especially RWAs. So really excited. I just came back from EFCC, and RWAs was really a hot topic. They were talking about the different phases of RWAs and how the tokenization phase, which is sort of like the first phase, that's more or less well in the way of tokenizing everything. And the next phase is about integrating these tokenized RWA assets into DeFi protocols, which is what we are seeing here with JC from Townsquare and Anchored as well with their tokenized equities. So really excited to see this synergy happening and on Monad, where transactions are really fast, transactions are cheap, and making all of this a much more user-friendly experience for users all over the world.
Yeah, for sure. Thank you so much, CJ. And just a quick health check. How was ETCC? What did you think?
I think it's like the nicest country to do a conference during this time of the year, not like last year.
Yeah.
So yeah, really enjoyed it.
Yeah. No, it's I have fond memories of when I went last year. But yeah, you're right. I think at the moment there's so much momentum around RWAs. I think just this week, Plume announced that they just launched their first tokenized payroll pilot. You have one of the largest European asset managers, Spyco Mundi, also announcing a 100 million tokenized fund on Ethereum and Stellar. There's just so much momentum, right? And I think that we're at that point where it's not a question of if but when, and really thinking about how all these assets can be integrated across DeFi is definitely where one of the largest sort of unlocks is. So yeah, really excited to get into that. On our side, just in case you don't know, Monday Trade, we have been teasing about RWAs for quite a long time now. I think our first tease was back in late January, and then we opened up the RWA waitlist around mid-February, and then just as of late March, or the 30th of March, we opened up finally our early access. So we have a few people, or quite a few people now, playing around with it. We've seen that the assets that people like the most are Google and Nvidia. Surprise, surprise. And yeah, we have the full public launch coming very soon. But thank you so much to everyone who's really on the user side, who's been giving so much feedback. It's looking very, very neat at the moment, and yeah, very, very excited to maybe show it later in this live stream. But yeah, I think maybe taking a step back, we'd love to get a sense from you, CJ, on how Monad is thinking about RWAs. I just mentioned earlier, there's a $100 million fund coming to Ethereum and Stellar. There's a lot of work that's being done there. And I know that Monad as well has a very strong strategy around this. So we'd love to just hear from you if you have any insights from us, maybe post ETC.
Yeah. I mean, I can share from what I've seen so far in terms of RWA assets that have gotten traction. I would put it in 3 main buckets. The first is probably the most successful one. It would be the tokenized T-bills, which includes, I guess, the money market funds, maybe the AAA CLOs. That's kind of all lumped together into that main basket of pretty safe loans, I guess, or bonds. That's typically yielding anywhere from 3.5 to 4+%. And that has, I think, a lot of traction. I think most of the RWA TVL is in that bucket, if I'm not mistaken. Definitely in the many billions. So that is quite interesting when it first came out. Not as interesting now, seeing that there's a lot of people already doing that. And then that brings me to the next bucket, which would be the, I guess, sort of off-chain trading strategies, whether it's basis trade from off-chain assets and then tokenizing that strategy into a on-chain product. So the yield is still coming from RWA, but it's coming from more sophisticated delta neutral strategies. I think that is yielding a higher. It's a very big range. So that I think is more interesting because it is opening up more sophisticated strategies that typically retail won't be able to have access to. And then the third bucket is the private credit stuff, more basically the financing of like businesses and their cash flow, and you're just giving them a loan that is used to sort of either accelerate their business, things like that, and then they use their cash flow to return back the loan with a pretty decent interest depending on the type of agreement. So these will be the 3 main buckets that we're seeing, and I think all of them are increasingly going on-chain, including tokenized equities, of course, actually there's a 4th bucket, which would be like the tokenized equities itself. That I think has almost $1 billion in TVL already. So that's actually growing very fast. So I think at Monad, there is combination of all of these buckets, all of these earn products is available on Monad. So whether people have a lower risk profile or a higher risk profile, I believe there is a product on Monad that can meet their risk profile. So we are looking to continue to have Monad be an attractive ecosystem for these RWA assets to deploy on. Yeah.
Awesome. Yeah, I mean, I completely agree. And I think everyone here is aligned on the thesis that stablecoin adoption is going to continue, to accelerate. And as more people hold capital, let's say on chain, they're going to be looking for other uses that move beyond payments, right? A lot of that capital needs yield, right? Or not necessarily needs it, but a lot of people will be looking for it. There's definitely going to be a latent demand there. Maybe a question for you, JC. I nearly said CJ there. For JC, you know, I think this recent week has been pretty shaken up by the exploit that happened on Drift, right? And I think that sometimes it's, you know, still our Achilles heel as an industry to be able to attract serious capital with just the number of exploits. How do you view that as a lending protocol? Just because there's so much capital that, you know, long term will accrue to products like yourselves and will sit there. How do you think about security, and what do you think the industry could be doing better at this point in time?
Right. I think even though a lot of the protocols in terms of the hard coding of the project has been battle tested and secured by many auditors, the human factor remains an issue, remains like an attack vector in the industry, right? I think previously with a lot of the prior hacks, what people have gotten used to is, you know, always pen testing your protocol multiple times with multiple auditors, having open contexts with you know, white hackers. So that's sort of gotten the industry more and more cognizant of protecting themselves on the software front. But on the humanware front, I think that's something that we didn't really see quite a lot of, or have sort of started to wake up to because of this recent exploit. And certainly, it would not be, you know, a far-flung thing to imagine that this would eventually happen on a great scale like this, just because a lot of the teams these days in crypto, but more and more so in the broader industries, have been remotely managed or remotely organized. You know, be it, you know, infrastructure level project or like a DeFi protocol, or, you know, in our context, in RWA project, either, you know, a mix between Web 2.5 and Web 3, or just, you know, purely coming from a Web 2 angle. So like the human attack vector seems to be like the quite highlighted area in this case. So and certainly at Townsquare, we are a mostly distributed organization building from different time zones of the world. We definitely have gotten, you know, flags in this context before from friendly, either you know, friendly partners or, you know, auditors before. So we sort of have hardened ourselves, you know, both on the software and the humanware front. But, you know, it's definitely, and also just looking from a ramification standpoint, you know, an exploit of this scale, once it happens within a particular ecosystem, could be damaging to not just one protocol, but, you know, many protocols in the ecosystem. So how does one wear off the effect of contamination is also, you know, something to think about here. And definitely, you know, Townsquare, since we are a lending protocol, we have, you know, 22 assets listed on the protocol. A lot of it is yield bearing, you know, so with yield sources coming from other protocols. So, you know, a lot of our product offering is built upon composable Legos. So something, you know, this is something definitely we need to be cognizant of, and also want to make sure that, you know, the protocols and the primitives that we work with, be it in RWA or in, you know, pure DeFi native, are well protected against. So typically when we integrate an asset, we look at, you know, track record, we look at the audits, we look at their code base in all fronts. But, you know, the human factor, I would say, definitely there would be, there's like need for human attack vector protection as well. I remember it was shortly before the Monad mainnet launch that there was like a couple of emergency contingency training sessions, organized by Monad Foundation for native protocols, native product teams on Monad, about like what are some of the contingencies, some cases, what will you need to do, like what the product teams will need to do in terms of disaster prevention and also remedies, right? So I think having awareness and also taking steps to actually ensure or decrease the chances of this happening is pretty vital. And looking at the details of this case is actually very interesting. I mean, the post-mortem analysis is that it was coming from North Korean hackers. So I mean and it's been distributing. It's been going pretty viral in some of the Twitter communities, that now the way to fend off like North Korean hackers is like tell them to say that Kim Jong-un is a fat pig on Telegram, right? So yeah, I guess if it's that case, you can always try to use tricks like that to testify. But then how long would that trick last? Nobody knows, right? So you maybe at some point there will be some internal policy in those North Korean hack groups that in order for them to actually hack the money or steal the money, they are allowed to speak phrases like this, right? But definitely be aware of who you put in contact with. Always do multiple reference checks when you come in contact with someone.
Yeah, for sure. I mean, it's I think especially around a product launch, the number of phishing emails that get sent as it posing maybe as a colleague, or something that's changed in a vesting schedule, or something that's just makes you jump to click is always increased. So, and it's only going to increase, right? So I think having teams that have a good awareness of being always security first, and one of the things that I've noticed is that you feel that you're sort of getting rushed, right? Even though you're behind a screen and no one is rushing you, there's always that sense when there could be where you could be getting rushed, right? When you're actually dealing with some of these situations. I mean, the drift exploit obviously is very large. I do also want to contextualize it a little bit, right? Which is, I think more than $1 trillion gets lost to financial scams annually in traditional finance. So as a percentage of what we're doing, and just given where we're at, this is obviously normal. And we have some very sophisticated participants, let's say, that are trying to hack some of these protocols. But nonetheless, this is the part of the nature of building in finance and trying to rebuild it from the ground upwards. But you're completely right as well that it does have a knock-on effect, especially, for example, with the Resolve breach that happened recently. The knock-on effect for the whole it happens to a certain degree to the whole Ethereum ecosystem, right? You have Morpho, which gets affected. You have the curators, which also end up getting affected. So there's a lot of not only contagion from a capital point of view, but from a brand sort of point of view as well. But yeah, thank you so much for your insights. I guess just to go into a little bit of what Monday Trade is doing on the RWA front and how we've actually been able to get there. So ultimately, the goal is really to broaden and make RWAs more accessible to a wider audience. Initially, there's going to be these 10 assets, which are the top 10 NASDAQ assets. And from there, we're going to increase to broaden to different markets. We're very lucky to be partnering with Anchored, which is a new tokenization platform that's going to be focusing initially on tokenized equities, but is broadening also the number of assets that it's bringing on chain. And I think it's a great move for us as Monday Trade, given the resilience of the volumes of some of these different asset classes, as opposed to just being a crypto sort of trading platform. And obviously all of this is facilitated significantly by the fact that we're built on Monad. The way that we've set up the integration with Anchored means that the purchases go through to then an underlying broker, so you get really strong institutional liquidity and execution. But at the same time, if you're placing sort of orders and removing them, for example, you can incur additional gas, right? So having something that runs in the way that Monad does is super advantageous for us. I wanted to maybe touch a little bit further on why RWAs are becoming such a big narrative at the moment, and maybe where we see like the whole industry going, right? Personally, I think that I'm seeing a huge convergence of banking, crypto, fintech, telco even, and it's all coming together, right? And it's no surprise to me that RWAs are moving onto crypto, and crypto is moving into fintech, and all these things are sort of getting mixed up. How do you think about it as a chain ecosystem, CJ? You're suddenly starting to think about, I'm not only competing against other chains, but I'm actually thinking about how to partner with maybe, or how to work collaboratively with a telco, right, or a bank. So how do you think about how all this is going to plan out in the next few years?
Yeah, that's a great question. That's kind of the next phase of RWA. So right now we're in the DeFi integration phase. We're packaging this up. We're making them useful and productive, not just having the token and sitting there doing nothing. The next phase is the distribution phase, where it's going to be this neobanks, these fintech companies, like you say, even like telcos, especially with like the Genius Act passing. I think a lot of these companies would start to think about using these RWA products as rewards or bonuses to their customers and their users to keep them onto their platform. So it will be like a mad rush where if your platform doesn't offer this kind of features, then you may be losing out to other platforms that may offer this kind of features. And us being a ecosystem, we basically sit in the middle of a lot of this, and we are talking to the RWA asset issuers, and we're talking to the neobanks and fintechs, and trying to connect them together. And these neobanks, fintech, Web2 companies essentially act as distribution channels for these RWA assets. And I think that's really where the future is going. Yeah, I think every main consumer app that you'll use in the future probably will have some of these kind of yield features baked into them, because money talks, and everyone is interested in getting more money in whatever they're doing. So I think as long as T-bill rates are not zero, right, a lot of that is going to be funneled into a lot of these neobanks, fintechs as a distribution channel for these RWA assets. And even if T-bill rates are zero, that's only going to increase rates elsewhere, and then there will still be yield, but then it will be higher up the risk curve, and hopefully nothing blows up in the far future. Yeah.
Sometimes I do reflect on the yields that are sometimes offered across different DeFi protocols. Given some of the risks that are involved, maybe don't necessarily compensate you from a risk reward point of view. So I think the industry is definitely going to have to think about at least how to strengthen maybe on the risk side, so that those yields do make sense for those trade-offs. I guess, how do you think trading is going to evolve in that sense, because we're also seeing the purpification, let's say, of everything, right? And I'm seeing, not too long ago, I tried to open a CFD account somewhere, right? And I found that actually the process of both onboarding and also trading was just actually not as good as some of the major perps platforms that you have now that have been established across the the crypto ecosystems. So do you think that traders or retail users are going to also move into that perp direction? I mean, we've also seen the huge rise of prediction markets. So maybe JC, even if it's a little bit outside of your territory, if you have any thoughts on that, I would love to hear them.
Yeah, sorry. The question was how just on the trading side, the RWA trading on chain would move forward.
Exactly. Yeah, we're seeing a lot of perps products starting to become very successful. I think in August of last year, Hyperliquid did more trading volume than Robinhood. So pretty insane to me that is possible these days, and it also shows just how much some of these on-chain products can scale. So yeah, in terms of maybe this is not necessarily in your knowledge sort of domain as much of CJ. Also, you can answer this, but how do you think the trading is going to evolve in the next few years on the retail side?
Yeah, I actually think there's a lot of demand for just trading of stocks, and not just limited to the public market stocks that are already tradable on NASDAQ, etc., but also within the realm of pre-IPO stocks. I think so. I've been in quite a few SPV groups where pre-IPO stocks are being traded over the counter, and it seems that the demand for trading a lot of these stocks doesn't have like segregation between Web2 and Web3 and TradFi traders or investors. A lot of these people, they really they sort of trade a lot of crypto, but they also invest a lot in TradFi or in these equity companies, right? So I think the demand for a lot of these stocks is real. What I've been seeing recently, in terms of not just like the purely on-chain side of trading like Hyperliquids, but also what some of my friends, these DGen traders and Web2, Web3 overlap investors have been getting into is the pre-IPO stocks of SpaceX, definitely a lot of the AI stocks, but these high demand emergence tech, these frontier stocks have been heavily traded and demanded in the public realm. I think this is sort of where we see the convergence of the audiences a little bit, and that is as the market attention shifts between the volatile assets, but also these emerging stocks audience really starts to exist both in these RWA crypto trading side of things, but also but also in the traditional NASDAQ trading desks. So I'll be very interested to see how the RWA, the trading side of RWA, gradually converges these two audiences more closely. I think last year when sort of the AI boom took place and sort of the crypto audience started to also engage a lot in the traditional equity market, that was sort of actually a good thing now thinking back. Robinhood brought a lot of retail traders from the equity market into crypto, and then the AI boom last year sort of shifted some of the attention of the crypto audience back into TradFi. So I think this convergence already started to happen. a while ago, but now and the trading of RWA on chain is I think it's an interesting instrument right now to capitalize on that convergence of audiences.
Yeah, it's interesting that there is definitely a convergence of demand, right? But there's also a divergence, right, in terms of companies are staying private for longer, right? And they're able to raise now these monster rounds that, you previously would have only the OpenAI round that they just raised, you wouldn't have been able to raise that capital privately previously, right? You would have had to do an IPO. And now what we're seeing is this divergence, right? Where companies are staying private for longer, but we're actually trying to work in the opposite direction to open and broaden access, right? And to actually lower this barrier. But it's challenging, right? It's challenging because pre-IPO stocks or companies, they have different, SPV structures. The SPV or the access that you have, for example, in some of the groups that you're in won't necessarily be the same structure as others. So it's very hard to actually build sort of good liquidity around some of these assets. But it's definitely part of the mission. Yeah, and so that's, Monday Trade. I think we're also keenly exploring that with Anchored. I'm sure the Monad ecosystem is also looking at this keenly. I'm just going to take a little sort of detour towards delving deeper into Monday Trade, and so everyone has a good understanding of the mechanics of what's available at the moment and who can actually access what. So as I mentioned earlier, we have the RWA platform that is powered by Anchored. So we're working with Anchored to be able to actually provide this product. It's not us, Monday Trade, that is actually doing the tokenization. And so Anchored acts as a B2B sort of platform that can also integrate with other partners. Initially, as I mentioned, we're going to be doing the top 10 US NASDAQ stocks, and the trading is available 24/5. So that means that it's closed on weekends, and that's part of the trade-off that we've made in terms of the liquidity model that we've designed. So in order to be able to access institutional liquidity, initially, we have decided to move away from what would be an AMM sort of pool style liquidity. But we've seen a lot of very good feedback from our initial users. Our early access is already live, as I mentioned, and we will be going and doing our full launch very shortly. So do watch this space. And that's a very brief summary. We go onto Monday Trade's blog, and you'll be able to learn more about the details. But I wanted to also do a recap on maybe Monad and how, why it's needed for RWAs, but also more broadly. I think this goes back to the general thesis as to why both Monday Trade and also Townsquare were such early builders on Monad. So maybe CJ, if you want to share a little bit more about how you view Monad at the moment, how maybe versus the great enemy Solana or others. Yeah, actually, who do you think is the enemy in your eyes?
I don't really think we really consider enemies, even personally and internally. Right? We're all just trying to
telling
push.
me you're telling me that you don't have your daily round meeting with the rest of your team, and you're like, these guys, we're gonna go.
No, definitely not. Absolutely not. And we are all just pushing DeFi forward. And in terms of how Monad is, or how I think Monad is viewing this, well, there's a lot of advantages to having these tokenized equities on chain. First being, of course, accessibility. Right? I think majority of the world actually don't have access to US equity or US brokerages natively. And having it on chain just opens up global accessibility and also more convenience. I think some equity stocks are 24/7, some are 24/5, but generally that's still more open and accessible compared to traditional markets, where it's usually just during market hours. And even if they have pre-market or post-market after hours, it may not cover the full 24 hours during the weekdays as well. And not to mention liquidity will also be not as high as compared to what's possible on chain. And then of course the chain level effect matters a lot, where you have the composability and the atomicness of a chain, where you can, for example, if let's say Monday Trade were to also list equity perps, someone could theoretically do a atomic transaction to buy tokenized equity and put it onto Townsquare, the lending market, and then borrow stable coins and then short the equity perps on Monday Trade in the same size to run a delta neutral basis trade if the funding rate is high. And you can do that in a single block in theory. And that could be a new kind of structured product, essentially, that could be really interesting to explore. Because, for example, Hyperliquid, with their recent HIP launches, all have at least periods of elevated funding rate in the hundreds of percent. And I believe people have noticed that, and I believe they're thinking of running basis trades on that. But having it, but they probably have to run basis trade on a traditional brokerage, right? And then that makes it non-fungible, that makes it complicated. There are trust assumptions, there are off-chain trust assumptions, etc. And if they want to package it as a product, you would then have to trust a lot of these other trust assumptions. But if you were to do it fully on-chain, then the trust assumptions are all fully verifiable, and it will be a lot more palatable for retail. So that is another benefit. And then, of course, having it on a chain that's fast, right, is in the event they have to unwind or if they have to do liquidations, etc., then it can all be done very quickly. And this also means that in theory, like LTV ratios of these markets, of these lending markets, can be higher than normal on non-fast chains. And being an L1 also means we have a lot of it's a lot easier for market makers to run strategies and provide liquidity on chain. Being EVM also helps a lot because that's where most of the TVL is. So there's overall like many different advantages that I've just mentioned about having this RWA to be done on chain.
For sure.
Yeah, on Monad. Yeah,
for sure. And I think that the fact that Monad is EVM also unlocks a huge developer ecosystem and just inherits so much of the good work that's come before. So it's great to see Monad sort of taking that under its wing and really elevating it to the next level. I wanted to ask you, JC, because CJ's just talked about liquidations and different LTV ratios on lending markets. Can you just run me through how liquidations work on Townsquare, and how you think about it, and maybe confirm or push back on what CJ has just said about some of the ratios and what it allows you to do as a project on Monad.
Right. I think it's new territory for any lending market, a lending protocol in Web3 to trade into, with supporting either just RWA tokens in general as collateral, or specifically like these publicly traded equity tokens, right? So at this moment, we really don't have the backtestable data to elucidate or validate the specific LTV ratio setting for these equity tokens at the moment. So what the Townsquare position and take on this is really we want to work with Monday Trade, you guys, with initially setting up some not so loose but not too tight LTV LTV settings for some of these assets that we see the most demand is. Most demand being a factor here in that, when it comes to just liquidity and also just trading volumes, more demand means there's like more liquidity, and that means it's safer for liquidators to liquidate the asset in case of in case of the user that goes under, right? So initially, just a random random range to throw out, we could look at 40 to 60%, similar to how the LTV setting is for some of the crypto volatile assets at the moment, right? So and then once I think once the range, once we have sort of the backtestable data after the initial period, then we can circle back and say, hey, should we go lower or should we go higher? So, but either way, I think I definitely agree with what CJ mentions, that this sort of opens up new strategies for these RWA traders to experiment with, borrowing out stables against their RWA collateral and then run like sort of a short or like a hedge strategy on the market, which is not necessarily something that you can do out in the TradFi markets these days. Whereas it's crypto being a lot more composable than TradFi markets as it is, allows for that kind of strategies. And we've sort of seen RWAs taken off on other chains and maybe on Monad, given the speed and efficiency of this layer one, it attracts users to experiment with some new strategies at lower risks from the infrastructure support side.
Yeah, for sure. It's definitely very interesting that it's evolved in that way. And I think one of the things that I think everyone is still trying to work out is how we can bring tokenized funds, right, whose NAV doesn't necessarily update on a daily basis, or even it's not necessarily atomic in that way. How to actually integrate those sort of types of assets into lending markets, right? Because it's very easy with crypto native assets to be able to run these sort of functions, but then at the same time, with these other assets that maybe don't sit natively on chain, it's a bit more challenging. Where do you think, or how do you think that's going to be solved in the next few years? Do you envisage a world where actually funds will be natively on chain, and so the NAV will happen directly on chain, and you'll be able to run those sort of strategies? Or where do you see that going, JC?
Yeah, I think currently there's a trend in RWA of just more and more companies willing to tokenize their assets and bring it on chain to access the liquidity that Web3 has. And when I say liquidity, I mean mostly the stable liquidities that are seeking yield at the moment. And I do see that's where there's a real demand opportunity for a lot of these money market funds bringing their RWAs on chain. So I think that's where there is sort of a tested verifiable demand already, and I do see that more of that is going to come. I think at the conferences in crypto right now, you already sort of see most of a lot of the participants in DeFi, being these sort of curators, the vault runners, operators that essentially are managing assets and generate yield for the LPs, right? And we sort of saw that version already way back in TradFi, and now we are seeing an instantiation of that in crypto happening natively. And with that kind of market opportunity there, I do see there is I do see that as a natural extension for TradFi fund managers to move their assets on chain. And I'm just talking with my friends, in Asia, more and more companies nowadays are seeking to get their either private credit, corporate bonds on chain to access the liquidity that they normally wouldn't have access to in the TradFi market, or would be extremely hard from a compliance standpoint to access. And I think what you mentioned about a lot of these large companies, now there's more willingness among a lot of the companies to stay private. A lot of the companies are trying to stay private, whereas it's like an extremely profitable business for them. So I think accessing liquidity, borrowing some money on chain, whereas paying back in RWA yield, that is something that attracts a lot of these TradFi companies, private companies in Web3.
Yeah, for sure. And one final follow-up question for you. In terms of Townsquare and your future plans, what are you most excited about? I know you've got a lot of integrations happening and new assets coming to the platform, but I don't know exactly what you can share, so I'll pass the mic over to you.
Yeah, I think on the RWA side, running RWA collaterals would be an interesting experiment, and so that we can see the demand there is and how potentially we can get some of that more crypto users from that part of the demographic to Townsquare. But also we do have a focus on the RWAs in general, right? We do have a vault developed already that are customizable for different curator needs. And now we are in the process of scouting for quality RWAs to move to on-chain venues. So we do have quite a few products in the pipeline. Obviously, these are just a couple of the products that we can mention. And at this point, we do have other branches going into the payment side. As well, and that is just something that we sort of have in the back pocket under the overarching goal of enabling mass adoption to crypto. I think all of that said, our Monad focus remains unshifted with all of these new branches of business going on. Partly because we have sensed, in talking with a lot of these RWA partners, but also payment partners, that they do have a very good impression and favorable view of the Monad blockchain, from all sorts of angles, from compliance, the background of the team, but also the solidity of the tech itself, right? So I guess if we were to summarize it, we have quite a few new branches of operations opening up, and we want to grow with Monad and also the ecosystem partners of Monad together in this journey.
Awesome. Yeah, thank you so much for your thoughts on that, JC. I wanted to wrap it up with a little demo of Monday Trade live here. Hopefully my Wi-Fi is good enough to share my screen. It has not been something that I've tested yet, but we're going to give it a shot. So let me just try and share my screen. Okay. All right. I think people can see it. All right. So here we are in the RWA section of Monday Trade. We have some of the assets that are available. Google's having a good little run as of late. And yeah, we're still in pre-market hours. As you can see, there's a market opening countdown, which means that at the moment, you can't place market orders. You can only place limit orders, but they do often get filled, especially if they're close to the market price. you'll see something here, which is MUSD. So MUSD, the M we've named for Monday Trade, is basically a one-to-one USD-backed accounting unit. So it reflects really the real-time sort of purchasing power. So you basically deposit USDC into your account, and then you have MUSD. As it says here, it's not a cryptocurrency or stablecoin. It's just a unit of accounting. And very simple, here I have some MUSD already in my account, and then also some USDC. So if I already have some MUSD, I can, for example, choose something here as a limit order. Then if I go down to buy, you can see here that it takes only from the MUSD. If I say I wanted to do more than what my my MUSD account has, so I put $40, it would also take some from my USDC wallet balance. And then I press buy, very simple. And there it is. Your limit order has been submitted, and I have it here. And then I can just cancel it if I want to. And there we go. Now, often if it's close to the price, the market price, as I mentioned, it will get filled pretty soon. And yeah, unfortunately, the market hours are not open just yet, so we can't show anymore. But yeah, you can go over to your portfolio page as well, and you can see your RWA section here, alongside obviously the other features on your Monday Trade account. So little tour. We've also enabled one-click trading for the RWA account, which makes it super smooth, as you just witnessed there. So no confirming in your wallet once you've enabled one-click trading, which is also something that we have enabled for perps. So very excited to be showcasing this to you now, and please do add yourselves to the waitlist so that we can approve you and you can get it testing today before we do our live launch. Thank you so much. Awesome. So yeah, I think that wraps it up for the day. Thank you so much to both of you, CJ and JC, for joining me. It's really awesome to be, chatting. Well, obviously we chat off these sort of podcasts frequently, but it's great to have you on as well and hear your thoughts and take stock really of where we're at. There's a lot of background work that goes on, so it's great to have it out in the open sometimes. So yeah, thank you so much, and look forward to having you on the show again soon.
Thanks so much for having us.
Right, thank you guys.
Thank you. Cheers.